Hey guys, back with another video. Today we're talking about tips for individual investors, things to remember. So really one of the first things I ever learned when I was just getting into my investing journey was that mutual funds actually underperform the S&P 500 well over 90% of the time. Now, these people are supposed to be the professionals of investing, and they underperform the S&P, as I said, 90% of the time. So I think it's fair to say that the majority of individual stock investors underperform the S&P. So one of the conclusions we can reach from this is that most people should just invest in the S&P 500, and you're gonna do better than if you try to pick your own stocks. And it's really difficult to argue with this, because even hedge funds, most hedge funds lose to the S&P over sustained periods of time. Look at Cathie Wood. It looked like she was obviously destroying the S&P 500. But if you look at it now, I believe even over a 5-year period, which is what she says her benchmark is stocks over 5-year periods, the S&P has outperformed her ETF. So, that's what I wanted to preface this conversation with, is that nobody can really be criticized for just choosing the S&P 500 as their major investment. But I myself, as an individual stock investor, need to at least try to have a counter argument to this. And I think as an individual stock investor, it's unrealistic to think that you can hold, more than 20 stocks and for it to make sense what you're doing, unless you're like literally devoting your entire life to picking your stocks. Because especially if these are high growth technology stocks, because there's no way you have the amount of time to put in the research to each of those stocks that really gives you an edge over the competition. And this is why I have my stocks concentrated, and my cryptos for that matter, concentrated into just a few. For me, Tesla, Bitcoin, those ones are just massive. That takes up, I'd say, close to 50% of my portfolio is in Tesla and Bitcoin, mostly Tesla, of that 50%. And this makes it so that I can know and be, do just lots and lots of research on those two things. And imagine having 50% of your portfolio in 20 different companies. You're not going to be able to do as much research, obviously, for each individual company. So this is how I think about it. But I also do like to have some ETFs. I don't have the S&P 500 ETF, but I do have a uranium ETF, and I also have a gold ETF that just follows the price of gold. And I am looking to buy the TAN ETF, which is solar energy ETF. I'm looking to buy that if it goes lower. So I think this is also a good strategy for individual stock investors, is buying ETFs for sectors that you like. And I definitely like I like uranium, and I like solar energy. So I just wanted to make this quick video, and because this was on my mind, and again, like the majority of the time, the S&P is gonna outperform individual investors. So it's just something to remember. And unless you're passionate and you really enjoy stock picking, just buy the S&P 500. For whatever reason, it gives me joy, and I enjoy stock picking. I enjoy looking into these companies, and it is risky. And so if it's not something that you enjoy, that you're into, then just buy the S&P 500 and you'll outperform. And this is something that Warren Buffett recommends to most individual stock investors as well. So really difficult to argue against. So if you like the video, leave a like, subscribe. See you next video.